Something huge is happening in India's financial sector right now. We're talking about a full-blown digital revolution. Today, we're going to break down a new fund from Canara Robeco that's designed to ride that exact wave. But is it the right move for you? Well, let's dive in and figure it out. So here's the game plan for today. We're going to start with the big picture, what's happening in India's financial world. Then we'll look at why this might be a Goldilocks opportunity, break down exactly how this fund plans to invest, get real about the risks involved, and then figure out who this fund is actually for. And we'll wrap up with all the key details you need to know. Okay, first things first. To really get what this fund is all about, you've got to understand the massive transformation that's sweeping across India's entire financial landscape. And wow, this image really just nails it, doesn't it? It's not just about traditional banks anymore. What we have now is this deeply interconnected digital web of banking, insurance, capital markets, and all these new fintech players, all buzzing around and working together. So, just how big is this market we're talking about? Get a load of this number. 5 trillion rupees. And that's the estimated profit pool for the entire financial services and insurance sector just for the 2025 financial year. It's an absolutely massive number, and it's growing like crazy, all thanks to new tech and a huge jump in demand. This didn't just happen overnight. If you look back, the whole focus was just on safety and walking into a physical bank branch. Now, people are way more comfortable with borrowing money, investing, and doing it all from their phones. The real game changer here was the Jam Trinity. That's Jandan, Aadhaar, and mobile. It basically brought millions of people into the formal financial system for the first time and just lit a fire under the whole fintech revolution we're seeing today. Okay, so that's the revolution. We get it. Things are changing fast. But why right now? What makes this particular moment so special for investors? Well, the fund manager himself calls it a Goldilocks moment. And if you're not familiar with that term, it basically means conditions are just right. Not too hot, not too cold. It's what they see as the perfect storm for steady, sustainable growth. And this Goldilocks feeling isn't just a hunch. It's backed by some really powerful long-term trends. I mean, as people earn more, they want more credit. The insurance market in India is still tiny compared to the rest of the world, so there's huge room to grow. We're also seeing this thing called financialization, which is just a fancy way of saying people are finally moving their savings out from under the mattress and into things like stocks and mutual funds. On top of all that, a lot of these new financial businesses are digital, which means they can scale up really fast and become more profitable. Okay, and this slide? This is where it gets really interesting. Take a look at corporate India. This chart shows the debt-to-equity ratio, which is just a measure of how much debt companies are carrying. And right now, it's at a 15-year low. What does that mean? It means companies are healthy, they're not drowning in debt, and they have plenty of firepower to borrow and invest, which, of course, is great news for the entire banking system. All right, the opportunity looks pretty compelling, right? So how exactly is this fund planning to tap into all of that? Let's get into their playbook. First thing you absolutely need to know, this is a sectoral fund. And that's a huge deal because it means it's not spread out across the whole market. It has a laser focus on just this one slice of the economy. And that, as you can imagine, has huge implications for both the potential upside and the downside. But hold on, they're not just throwing darts at a board here. They have a really disciplined process, almost like a funnel. They start with this huge universe of over 260 companies. Then their research team filters that down to about 70 names they think are worth investing in. From that smaller group, they handpick a portfolio of their absolute best ideas. And this is a really crucial point. Even though it's focused on one sector, they're aiming for diversity within that sector. So this isn't just about the usual big-name banks. They can invest across the whole financial spectrum, from different types of banks to insurance companies, asset managers, and even those exciting new fintech platforms. All right, this all sounds pretty exciting, I know. But, you know the saying, with high potential reward comes high risk. And we absolutely have to talk about the flip side of a focused, sectoral investment like this. This slide lays it out perfectly. Think of it this way. A broad market fund is like a buffet. You get a little bit of everything. If one dish is bad, you've got plenty of other options. A sectoral fund, on the other hand, is like ordering just one thing. If that dish is amazing, you're thrilled. But if it's not, well, you get the idea. All your eggs are in one basket. And it's not just about concentration. There are very specific risks tied to this sector. For instance, bank profits can swing wildly based on what interest rates are doing. There's always the risk of loans going bad, what they call NPAs. And because this whole industry is so heavily regulated, a single rule change from the government or the RBI can change the game overnight. So, after weighing this massive opportunity against these very real risks, we come to the most important question of all. Who is this fund actually designed for? Is it for you? Okay, let me be crystal clear here. This is not for the faint of heart. This fund is built for an investor with a very high tolerance for risk, someone who totally gets and is comfortable with putting their money in a single sector. You've got to be in it for the long haul. We're talking 5 years minimum. And at the end of the day, you have to be a true believer in the long-term growth story of India's financial services. All right, so if you've heard all that, the good, the bad, and the risky, and you still think this might be a fit for your portfolio, then here are the essential details you need to know about the new fund offer, or NFO. So mark your calendars. The NFO window is open from February 27th, and it closes on March 13th, 2026. It is an open-ended scheme, so you can get in and out after the NFO period. Its performance is going to be measured against the Nifty Financial Services Index. And, just to reiterate what we've been saying, the official risk monitor puts this squarely in the very high category. No surprises there. So there you have it, the whole story. It's a concentrated bet on India's financial future, built on this incredible story of digital revolution and huge growth potential. But it absolutely comes with the high stakes of sectoral risk. The only question left, and it's a big one that only you can answer, is whether that kind of focused, high-stakes investment is the right move for your long-term goals.